Let's talk now about the research and development tax relief. The EU has the power, if it considers that too much incentive is being given by a state to certain types of industry or certain types of undertaking, it has the power to restrict that support. It's called a notifiable support. And research and development is one of such types of support, although the requirements are less stringent for SMEs, which is why we've got two sets of rules, one for larger companies and one set of rules which is much more advantageous for small and medium-sized enterprises. The relief is being significantly enhanced. From the 1st of April 2012, and this is for an SME, for a company which is liable to corporation tax, and I need to make it clear now that R&D relief is only available for expenditure incurred by companies, although if a company is in partnership with individuals, that company can claim the R&D relief. But from 1st of April 2012, every £1 spent on qualifying expenditure will attract an additional corporation tax deduction of £1.25. In other words, you're already getting your 100% relief for the expenditure. It's being enhanced by a further 125%. So a 225% relief for R&D expenditure made by SMEs. Which means that if you're a company which is paying the 20% corporation tax rate, you're going to save 45 pence in the pound for every bit of expenditure that you undertake. Quite a significant relief. And I put up here the HMRC definition of R&D. And it's a project which seeks to achieve an advance in overall knowledge or capability in a field of science or technology through the resolution of scientific or technological uncertainty, and not simply advance its own state of knowledge. And that's quite a mouthful, but one of the most important things when you're looking to claim R&D relief is to make sure that you're falling within that definition. The definition is applied strictly by HM Revenue and Customs, but they are open to persuasion and they are open to discussion. They have specialist units, which we'll talk about later. And it's a case really, when you're talking to HMRC, of using the right type of language. You need to be resolving a scientific or technological uncertainty. Maybe you didn't know where you were going when you set out, or where even you were going to end up. You might have known plenty about the subject area, and you might have had a bit of a wish list as to what the end product might be. That would all be R&D. If you try to reverse engineer or copy another product, that's not going to be R&D. If the information's already out there, but it's secret, and perhaps the best example of that is the legendary Coca-Cola recipe, which is out there but not generally known. If you're out and try and replicate that or something similar, then that is research and development. In other words, you're expanding the horizons of knowledge. There are some further requirements. The expenditure has to be related to the company's trade, not necessarily the trade that it's carrying on now, but one which it might like to carry on in the future. Until 31st of March 2012, there was a limit. You had to spend at least £10,000 per annum before you could claim the R&D relief. That's no longer the case. There's no longer a minimum for expenditure incurred for accounting periods ending after 1st of April 2012. And there's no annual upper limit either on the amount of R&D relief that you can get. But because of these EU regulations, the total amount of aid that an SME is allowed to get from a project can't exceed in total €7.5 million. Where an SME is making an adjusted tax loss, it can claim something called a payable tax credit. And that means HM Revenue and Customs will actually give you money. I won't even say give you money back. They'll give you the money because you've invested in a project for research and development. You surrender your loss. You say to HMRC, I've got this loss. I accept I'm not going to be able to carry it back or carry it forward. Instead, I'd like to convert some or all of it into a repayable tax credit. The only requirement is that the company is a going concern. You need to make your claim to HMRC for R&D enhancement within 2 years from the end of the accounting period. Now, one of the Ronseal tests that I was asked to put in was to convince you that it's not necessarily a difficult relief to claim. So in my firm, we have put together a group of individuals, tax advisors and accountants, who work where appropriate with scientists and engineers in our Innovation and Technology Tax Group to put together R&D claims for companies. And these are a few of the more interesting ones that we've managed to get through. And as I said earlier, it's about talking in the same language to HMRC. A few interesting facts. 95% of repayable credit claims are sent out by HMRC within 28 days. They're instructed to do so. The government really wants them to give away this money. There are 7 specialist centres in the UK, staffed by inspectors of taxes, engineers, software developers, etc. Now you can understand why we have to communicate with a similar sort of people to go meet the 7 specialist units. Their standing instructions are to be very positive, which I have to say, after 35 years in dealing with HMRC, is the first time I've heard that one. I've read their instruction book. They're told to be sympathetic to the R&D claimant, the person who, when you think about it, comes along to HM Revenue and Customs with his baby. He's very proud of it and he says, there you are. How would it be if an inspector of taxes said, well, somebody else brought that in last week? So they have standing instructions to be sympathetic. They're not bad people. A company could, if it wished, for accounting purposes, capitalise its R&D expenditure. Now that's strange because research and development expenditure, or the relief, is given specifically on revenue expenditure. But a company could capitalise otherwise revenue expenditure, maybe its staff costs, its salary costs on developing a project for accounting purposes and put the value on its balance sheet. But because that is actually revenue expenditure, it could still claim R&D relief. For the accountants here, you'd have it on the balance sheet and you'd create a deferred tax account, but still the tax relief is there. This bottom one, possibly you don't know about, but if you're a client of Francis Clark, I hope you do know about, and that is that we provide our clients with an insurance against fees incurred in a tax investigation. We've confirmed with our insurers that they will cover the costs of arguing with HMRC about R&D expenditure. Not necessarily the first submission to HMRC, but certainly if they then disagree with us, which sometimes they do, but not always, we can then, at no cost to our clients, argue the case until hopefully we're eventually successful. The next one I want to talk about is relatively little known. It's a research and development allowance. This is an allowance a bit like a capital allowance. Well, it is a capital allowance. An allowance that's given for capital expenditure incurred on a research and development project. This expenditure, to qualify, needs to be incurred by a trader. Actually, the R&D allowance doesn't necessarily have to be incurred by a company. You're all companies here, I suspect, anyway. And if capital expenditure is incurred for the carrying out of R&D, you can claim the plant and equipment at a special rate of capital allowance. If you're providing facilities for carrying out the research and development project, you can get 100% writing down allowance. Now that's probably the only 100% allowance still around. What's also interesting is, having claimed your 100% writing down allowance for tax purposes, if your R&D project comes to an end, you don't necessarily have to pay back that allowance. As long as you continue to own the asset and continue to use it for something, there's no balancing adjustment.